CNBC is reporting that there's a cut in rates by a quarter point. How unusual is this move in such a strong economy?
All right, well, let's separate it in two. 25 basis points is really not that big of a deal. It's sort of curbing things. The president saying he wanted a big rate cut. He didn't get a big rate cut. If we got 50 basis points out of Jay Powell, that would certainly raise eyebrows from those who are saying, hold on a second, is this guy falling to the president's prey who's going after him time and again? 25 basis points isn't huge. It is unprecedented when you look at the economy today versus the last time rates were cut in 2008, December 2008. In fact, when we were in the throes of the worst financial crisis since the Great Depression. I mean, the stock market alone, this year, it's up 20%. In 2008, it was down 37%. So it's very strange. Normally, you see a rate cut when we're in a downward spiral. Now, this is more the Fed looking to say, let's keep things stable. Let's keep this economic expansion before things take a downturn. And you have heard from people like Janet Yellen or Larry Summers who said this is not a bad idea. But what could be the cause for this, the geopolitical risk? The trade war. The president has put us in a position where there is a lot of global uncertainty. So you can look to the president's policies and say, wait a minute, he wanted a rate cut and he created a situation that warranted one.
And to that exact point, Steph, Ben, you write in Politico, quote, the Fed has made clear that trade tensions loom large in its worries about risks to the economy. Company investments in long-term projects like factories and technology picked up during the first half of 2018 in the wake of corporate tax cuts. But those investments have faded much faster than expected. I mean, is it fair to say that this is in direct response to the president's uncertainty in injecting uncertainty on trade into the markets?
Yeah, no question about it. I mean, Jay Powell, the Fed chair, said exactly that when he testified on Capitol Hill earlier this month. And he said it in other forums as well, that one of the big things the Fed is worried about is the impact of the trade war on the U.S. economy, and that they hinted at rate cuts for that reason. There are other reasons. There's global growth slowdowns, as Stephanie mentioned, in Europe and in Asia, and the Fed wants to isolate the U.S. from some of that fallout. But you don't have to look very far to see the impact. You look at second quarter gross domestic product. It grew 2.1%, which isn't terrible. It's fine. But business investment dropped 0.6%. It was all the consumer driving growth in the second quarter. You look at any measure of manufacturing, particularly in the industrial Midwest, and it's in recession right now. And that is partly due to Trump's trade war and the fact that people are unsure about what future policy is going to look like, not building new factories, not hiring as many new workers as they were before. Manufacturing job growth has slowed down. So in a way, Trump is getting what he wants from the Fed, at least part of it, not as much as he wants, as Stephanie said, but he's getting it because they think his policies are bad for the economy.
Casey, there's also a disconnect. Even if you're seeing new factories built or you're seeing business investment, those business investments are in technology, technology and automation that don't bring factory jobs back, factory jobs that no longer exist. So it doesn't solve for what the president's campaign promise was, which was we're going to bring those jobs back. We're going to keep those factories open. We're not keeping the old factories open, and things that are opening up now, the people who need work don't have the skills for.
Right. And Ben, one thing that caught my eye in that tweet, you know, this idea that we will win anyway. I mean, is there a sense that the president is pushing for this precisely because he wants an advantage in 2020?
Well, sure. I mean, obviously, any president running for re-election wants the Federal Reserve to be easing interest rate policy. We've seen that multiple presidents, not as publicly as Trump, but they have put some pressure on the Fed to cut rates. I mean, he absolutely wants a lower rate environment going into 2020. He'd like to see another cut. We should note also, Casey, in what the Fed did, Trump has banged on and on about something called quantitative tightening. We don't have to get in the weeds, explain exactly what that is, but it's taking...
I remember from the campaigns, quantitative easing. It's been a boogeyman for a while. Go ahead.
Exactly. And Trump was very mad that the Fed was, rolling back that policy of quantitative easing, essentially taking some liquidity out of the economy. They're stopping that now. They're stopping it earlier than they said they would. So Trump is getting his way on that. What he's going to tweet, I almost guarantee you, is that this is not enough, that the Fed needs to be much bigger and bolder. And then if the economy does slow more, he's simply going to blame the Fed, even though there's very little evidence that the slowdown is the responsibility of the Federal Reserve.
Hey there, I'm Chris Hayes from MSNBC. Thanks for watching MSNBC on YouTube. If you want to keep up to date with the videos we're putting out, you can click subscribe just below me or click over on this list to see lots of other great videos.